Most people are familiar with the most basic form of foreign exchange trading. They know that when you travel abroad, one of the first things you do after disembarking is to find the nearest place for currency exchange. Depending on the country you call home and the country you are visiting, currency exchange will leave you either richer or poorer based on the exchange rate. Nowadays, however, foreign exchange trading, or Forex, has taken on another meaning. If you hear two people excitedly chatting about Forex in an elevator or coffee shop, they are most likely referring to a type of investment trading that is growing in both popularity and esteem. How it works. Basically, Forex trading is how investment traders speculate regarding the trends and fluctuations in currencies. If a trader is able to stay on top of trends and accurately predict the disparities between pairs of currency values, they can make considerable profits through Forex trading. For instance, the dollar and euro is a very commonly traded currency pair. If you had reason to believe that the US dollar will drop in value compared to the euro, then you would go long, and purchase euro to dollar. If, on the other hand, you predict that the dollar will rise in value, then your reaction would be to go short. Of course, this is just a very basic example of the principles of Forex. Experienced traders keep track of many different currency pairs simultaneously using Forex trading systems. All foreign exchange trading is done through a Forex broker. These brokers handle the trades and place them on the open market by networking with banks. Because of the fluctuating nature of currency exchange, Forex is a very dynamic form of investment trading. Also, unlike the international stock market, Forex is open throughout the day. The primary reason people engage in Forex is, of course, to make a profit. However, many are motivated to stick with it because of its thrilling nature. Best strategies for up-and-coming traders. Although many people are able to supplement their incomes through Forex, it is by no means a quick and easy way to get rich. Using the Forex trading system correctly takes time, experience, and patience. Those who are new to a Forex trading system will need to spend time getting familiar with the jargon and tuning into ever-changing currency trends. Some general tips for newcomers to the Forex scene include: select a Forex trading system that accommodates and adapts to the dynamic nature of the market. If you are using a software package to manage your trades, you will be best served by a program that keeps pace with the lightning-fast changes that occur in currency trading. There is also a lot to be said for software that has a clear, easily understood format so you aren't struggling to keep track of what's happening in the market. When you first dip your toes into the world of Forex, a good rule of thumb is, less is more. This means that you should start small with your trading and build up slowly from there based on your successes. For instance, focus your initial efforts on a single currency pair and use that experience to inform future trades. Along those same lines, don't use the maximum amount of leverage when you are new to Forex. That's a surefire way to rapidly accumulate losses. Instead, begin with small leverage ratios and gradually increase as you become more experienced. If you really want to stay on top of trades and trends, you will need to use a Forex trading system that will send you messages regularly. This will allow you to immediately take advantage of trends and reap the financial benefits. Most Forex brokers allow you to use a trading demo to get some practice before actually investing any money. Take advantage of these demos as they can give you a feel for currency trading in a risk-free environment. Foreign exchange trading can be difficult to master, but with a level head, an effective Forex trading system, and patience, you will be rewarded for your efforts. The Forex market offers a lot of opportunities. But for various reasons, many people cannot take full advantage of these opportunities. Forex signal providers offer actionable trading signals that you can use to make profitable trades in the Forex market without needing to know the why or how of why these trades work. And with mirror trading, your portfolio can execute the same trades of a public trader that you trust. Reap the benefits of experienced traders and analysts. Forex trading is a hard-won skill that takes time and experience to develop. Not everyone has this experience, nor the time to develop the understanding required. Frankly, many people do not have the desire to put in the work needed to develop such skills. Many people do not have the emotional control to trade Forex effectively. For any of these reasons, Forex signal providers fill in this knowledge gap. With mirror trading, you don't even need the details of how to execute the trade. This is all carried out by the trader whose accounts you're mirroring. You are easily able to view the past performance of a trader before you mirror them, so you have a strong indication of their level of skill. Outsource the time and energy needed to trade effectively. Trading Forex profitably is a complicated endeavor, requiring a lot of analysis of charts and news. Keeping track of both the technical and the fundamental drivers of market movements can take up a lot of time. For some people, finding the optimal entry and exit points for a trader are just not something they enjoy. Some traders don't trust themselves to do this or don't believe they have the skills to do it effectively. Others have various responsibilities to fill their time and can't make room in their schedule to analyze the market. Whether you have other responsibilities or simply don't want to engage in this type of analysis, a Forex signal provider essentially offloads the work to someone else, leaving you with just the actionable information. Trading opportunities in Forex can present themselves very suddenly, and even those who do have the time or inclination to analyze the markets may not have the availability to monitor the market continuously in order to find each and every opportunity that a Forex signal provider can give you. Keeping up with the 7 major Forex currency pairs, which constitute about 85% of the Forex market, is a lot of work. With mirror trading, you don't even need the time to make the trades yourself based on the signals. Your portfolio will automatically mirror the portfolio of the trader you are following. This is a very powerful way to take advantage of the expertise of skilled traders that saves you time and a lot of effort. Forex signal providers and mirror trading are fairly recent developments in the Forex trading landscape that have great potential for bringing many more traders and investors into the Forex market. However, the time and effort saved in trading should be focused on choosing a good and reliable Forex signal provider or trading account to mirror. Recommended books for Forex trading at the description below. Please subscribe our channel for more updates.